Yeah, hello, how's it going? So we're gonna go ahead and run through a top-down analysis and kind of look at the markets from a top-down perspective because I think some people need this to kind of bring them back to reality um, of the current market structure with economic issues and so on and so forth. So a lot of people don't like to they like to speculate on economics. I can tell you, economics you can definitely speculate because that's the only thing you can do. The one thing you can't do is try and fight against economics, right? So we are currently, and we've been in since January, a recession. So I think that it's there's just more pain to come eventually, and I think a lot of people are a little bit too optimistic for risk on versus risk off. So understanding risk on versus risk off is very important, right? Because if you don't understand risk on versus risk off, what happens? You end up buying risk on, and you end up getting wrecked. And you're probably like, "What do you mean getting wrecked in a risk on?" It means basically you're essentially establishing yourself in a market that is very volatile versus a market that, while seeing downside, will be less volatile, which means less losses, less potential issues with your portfolio and portfolio balancing. A lot of people don't understand these key things. And that's why when you see people on Twitter, buy Bitcoin, 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 Bitcoin's great, great asset, great high risk asset. Just like Ethereum's a great high risk asset, right? If we're willing to understand these scenarios of high risk versus low risk, then we're able to create a portfolio that is not going to completely obliterate all of our overall finances, all of our investments, right? So if we look at it from that perspective, and we come in here and we look at the BTC, right? So I want to give you guys a little bit of perspective, and I kind of made this chart because I want people to kind of understand what's happening with the chart and what has been going on. So this is something we covered in the FS group, probably about a week ago, but it's been long enough. I can kind of drop this information here because I want people to kind of understand what happened. So we've got our cycles here for Bitcoin. So we got basically cycle one, right? And then we got the fallback from cycle one to our cycle bottoms. So you got the move, you got the cycle run, then you get the liquidity grab right here, right? And then you get the move, you get a little liquidity grab, then you get the move. This is kind of like one move all in one. And this is on the monthly, by the way. So because this is one move all in one, and we have this sideways accumulation zone before the rip again, then what does price do? Price comes back down to the rip. I almost see 2017 and 18 as this move all incorporated into one, right? So we have our move into the move. You then have the pullback right here. Now this pullback, again, pulls back into what? It pulls back into the consolidation area where the area kind of runs sideways for a little bit and then rips and then comes back and recovers all of that price action. What price stays? The bare floor, the ups and downs, the light ups and downs. When you first get that initial push, right? The market then establishes this side trend action. And really, in reality, a lot of people won't admit this nor even look at this, but I'm going to show you guys kind of what happened over here. So then you get that push, you get that sideways move, and then you get price, and then it comes back to the sideways move. Well, here we got a push, right? A rejection, then we get the pullback, and then we get the sideways move, right? And not only do we have that sideways move, we also have this sideways move. I would technically go with the upper sideways move, which would put us around 12 to 14, right? 12, 13. It could even go as low as possibly 10. But this sideways move is the one I would look for personally. So looking at that sideways move, that price action makes sense. And then if you look here, I've got each halving date marked out. So you got your halving of 2012, you got your halving of 2016, you got your halving of 2020, right? So if you take these and you look at them, how many increments of time is there in between each one? Well, 2012 to 2016 is 4 years. 2016 to 2020 is 4 years. And Bitcoin will be 2024 before it becomes, or before the next cycle, as far as the bottom or the halving date, right? So we got our halving date, 2024. So what does that mean? Well, if we look at that and we go and we run a time, right, from our halving back to our initial floor, you're looking at 548 days. If you go over here and you look at our halving to our floor, you got 578 days. Not too bad, right? You can kind of, that's like what, a month or two difference there. And then if you come back here and you go from our halving, you go back, this one's 396 days, roughly, right? It might be a little bit longer. Actually, it's a little bit longer. So let me redo that real quick. So floor right there, 427 days. So we'll say between 450, 570, roughly days, right? From that halving. So if we look at it from this perspective and we go forward thinking, our bottom was 761 days into the year, right? And then over here, our bottom was, we'll say right here, we'll go with that one, 852 days into the year. And really what we are currently is, well, if we went 852, we still have some time, right? I mean, you can evaluate this for yourself, but it took 852 days for this cycle to finish out. It took less time for this cycle. So if we are increasing in time, right, from halving date to bottom of market, then technically it should take longer for our bottom to play out. If you go by that, 761 and then 852. So that's 852. And then let's go ahead and let's mark out 761 because I know some people are like, oh, it's not fair. So 760, right? So some people are speculating that right here is the bottom. And by date, if we went between previous market and current market, then yeah, I would say that time frame wise, we're kind of in that general vicinity, right? We're in that general vicinity. But at the same time, are we at bottom already that fast, guys? It just fell off, right? Just like here, bottom, bottom, bottom. Look how many months we stayed at bottom when we're at bottom. Do you see how that works? Don't get too confident, all right? Because if we're at bottom, we should see a rounding in this zone. Now, keep in mind, price could still come down. Price could stay where it's at. Perfectly acceptable. Nothing wrong with that. It's not about being overly bearish. It's about understanding how long this could take to play out. So when you use a little bit of foresight, which is what we discussed in FS today, basically discussing different trading strategies, aka a swing trader. So a swing trader takes foresight into part of his trading strategy. A swing trader takes foresight, meaning economic issues, meaning, let's see, pandemics, meaning wars, so on and so forth. So when you account for all of these, have all of these not happen? Every single one of them in the past year? Now, some will say, oh, yeah, they've all happened and they're in the past. They're behind us. I would say war is very uncertain, right? It's very uncertain that that's behind us. Still currently going on in Ukraine. I would say potential we could end up, in a warring type scenario due to, supplying them. I would say that at the same time, pandemic, hey, every other day I hear about a new one coming up. So that could always be a scenario too, right? It's not necessarily, I mean, it's over, but it's not necessarily over, right? That could always end up being something else. So when you look at all these scenarios, and then to top that, we have recession, right? So when you look at all those scenarios, at no point in time on these bottoms, right? These bottoms that we're speaking of right now, has Bitcoin experienced these. And so a lot of people are thinking that Bitcoin is showing great strength against a lot of these. And I would somewhat agree, right? Somewhat, not fully, somewhat agree, because I would expect a high risk asset to be a lot lower right now. I really would. But at the end of the day, I still expect more downside. But people trying to say that certain prices aren't possible, it'll never happen, based on what? There's nothing out there right now that says that anybody's buying anything. The consumer is financially strapped right now. If you look at the data, look at the CPI reports, look at the data. It's actual math and numbers. It's not feelings and emotions. If you look at the data is there. It is showing you inflation is still rampant. People are not able to afford to buy and purchase. They're not able to afford to do things. The people that are currently purchasing, which is another argument that people make, oh yeah, credit card spend and all this other stuff is still high. They're buying stuff just to live, food, gas, so on and so forth. Are people eating out? Yeah. Do you know who's eating out? The rich. Middle class and poor are currently financially strapped due to high prices. With that being said, I think that a lot of this is just soaking into the market, because we're not just seeing it in crypto. Like, they are holding these floors just like they did here, right? Just like they did here. They're holding these floors only to dump deeper each time. S&P, another scenario. Look, narrative was bottoms in, not going any deeper. Boom. You get the lower high. Everybody swears it's never going deeper. Ha ha ha. We're going up. And what happens? You get the higher high of the previous, lower high of the previous, and then what happens? Price goes deeper. Then you get the move up, move down, then you get the lower high again, right? And now you're getting the move up again. It's a wish-wash of the market. Market makers are literally swimming in everybody's money. This is what we call a bear flag on the S&P. You have to be extremely careful with these. These are not good signs. They are not good signs that the market is doing positively. And a lot of people are like, oh yeah, well, look at this right here. No, yes, you're right. Look at this right here. What trend is this? What trend? The trend is your friend. That's a bullish trend. What trend is this? That's a bearish trend. We have fallen significantly under this bearish trend. Even if you went under, look, that's a bearish trend. There is nothing bullish about Google. We're in broadening wedges to the downside. This means the volatility can only get worse. Now, does this mean that this is indefinite? No, this will work itself out eventually. But I think it comes in time, right? In time, look, you got your rising price action, dump. Rising price action, dump. Pay attention to what's actually going on. Stop getting overly bullish. Stop getting overly hyped. Don't get overly bearish either, because I think there's going to be great buying opportunities. So you can't just be like, oh, okay, we hit 12K, 10K, BTC. I'm going to wait for 3K. Like, no, that's not at all what I'm saying. I am saying pay attention to the moves. Wait for good consolidation. Consolidation does not build long. Consolidation literally stays in a zone and chops sideways. That's what consolidation means. So if we're looking at price action by that perspective, this is not a good time to buy anything right now. Ethereum, another one. Look, Ethereum chopped down, W chopped back up. I'm thinking they'll probably come up and retest this bottom. But look, W, and what happened? W, and then what do you think is going to happen? Like, this merge narrative and stuff like that, it's I don't even know what to say anymore. It's all over the place. I'm just trying to help people protect their capital. That's it at the end of the day. Look, there is not a thing out there. You have to understand, okay? You have to understand. There is not a thing out there that benefits any bear to be bearish. You can say, oh, it's to drive traffic. You can say this and that. No, you drive more traffic being bullish. Even in a bear market, you will drive more traffic being bullish. Not only will you drive more traffic being bullish, how are you making profits in a bear? You can only do it one way. You can only do high risk leverage. And you're probably like, what do you mean high risk leverage? Because leverage is high risk. In a bull market, I can spot trade, which means minimal risk, right? I'm only losing what my stop is. I'm not losing anything else outside of that. So leverage, you can lose it all. You can get liquidated. There's no liquidations in spot. So in these scenarios, it's not profitable to be bearish. It's not. 100% it's not. And that's what I want you guys to understand. It's like, I'm not doing this to be like, I'm right and you're wrong. I'm doing this because that's what price is telling me. Price is telling me, hey, we're not done yet. So I'm following that. And when price says different, it'll say different. Look at ADA. Look at ADA. Like the volume is gone in ADA. It is literally gone. There's no volume in ADA. Like you gotta be careful with these plays. Man, look, Matic. I pointed this out in my last video. Order block, swing low, boom, hit the order block, swing low. Now price rejection. Now they could try and push back up in here and play the liquidity a little more if they think they can catch it. But they've already got a lot of liquidity in the move. Doesn't make any sense to go higher. But I mean, not saying it couldn't, but there's just so much untapped below here, guys. You gotta, and it's not me hoping that they go lower. It's the common sense move. It really is. Like, I know a lot of people are like, oh, you just wanted to go lower so you could buy lower. It's like, no, it's just common sense. You can see the liquidity there. There's lots of liquidity. Same thing on Sol. Look at this. Look at this big old gap here. Price has never revisited the zone. So like you got the down move into the up move, and now you're getting the up move into the what? Probably the down move. So definitely like try to be cautious being optimistic or trying to be like, oh yeah, well, what if this and what if that and what if a lot of things? Price action is not telling me what if. Price action is telling me and volume's telling me there's nothing there. People are not buying at these prices. People are not interested like what people are saying. I know people can say life-changing at this price. They said life-changing at 30. They said life-changing at 48. They said life-changing at 60. You got to understand the narratives are narratives. That's it at the end of the day. What we're reading is price action. Price action. The trend is your friend. Look at the trend on Litecoin. When the trend broke, that's your time to get out. Broke, retest, went. Google. You got levels on levels on levels. Look, this is the pandemic, okay? People really got to understand this. Look. Look at price. That's natural in 1 year for Google. Here's 18 to 19. Did price do this? Here's 17 to 18. Did price do this? Here's 16, right? 16 to 17. Did price do this? Pay attention. Pay attention to what is going on. Even in a 2-year span, we never even came close to this kind of rise. This kind of rise, man, it barely even occurred back here at the start of Google. And then the pullback and then the start. Like this, it's too much growth. Not enough profit taking. Market way overly bullish. These kind of things create rejections. Look at this. You got a doji right here on Disney. All right. What does a doji represent? It represents confusion. It represents uncertainty. It represents doubt. It means the market is not interested at buying at these prices because it's unsure of the market direction. It's unsure if the market can sustain higher highs. Dojis are bad things, and that's a clear one right there. It's day. If you come over to Amazon, perfect rejection. Look, I pointed this out in my last video. Look at this. It's already pulled back off the position. It's already backed away from the resistance. Lucid, still trading the zone, and it probably come back down and recover this wick way down here. Adobe, we got the drop down, the pull up, the drop down, the pull up. And look, we're pulling right, look, see right there? That's a white candle. That's basically a red candle is what they are. But You can see the pullback's already in play. It's already moved up, and now it's going to kind of reject. Now, some will say, okay, well, you got these, and then you got the blue candles. You got the white one, you got the blue candle. You got the white one, you got the blue candle. You got the white one. Yeah, they can continue building long, but what is building long? What do you build long to do? You build long to go short. You build short to go long. Short, long. Long, short. See how that works? That's how it works in a bear market. All right. OS2. Look, we talked about this last time. It got back above 3%. I thought it was going to drop more. I thought more consolidation, but it got back above 3%. Super scary stuff. But we'll see if it can go higher. It might have found support here, and it might be looking to go. Tesla, again, right back under resistance. Right back under resistance. Just keeps hitting it, hitting it, hitting it. And I'm using the monthly here, the monthly, because I want you to understand price action. Can I use a daily? Yes. Can I use the weekly? Yes. My results are still the same. They're still the same, right? And a lot of these are turning into, I hate to be the one to call it because I could be wrong. And I really, I want to be wrong. But, we're turning into like a head and shoulders pattern on a lot of things. So it's like, where's support? Well, for Tesla, next support below this is around 384. If Tesla breaks the zone, I could definitely see them coming back to this. Where's next support? I'm not saying we're going down here, guys. I'm just showing you support. That's it. All right. Next support, right in there. Look at that. Right on 104. Now, I'm not saying we go there. I'm just simply showing you on the monthly what that looks like. US oil, look. You got the move up, then you got the pullback, right? Then you got the move up, then you got the pullback. Move up, pullback, move up, pullback. This is a bear market. Look at this bear market. Look at oil's bear market. Pretty much went to zero. And then what it do? It recovered, right? And now we're right back in the same zone. And you're probably like, well, how do you know that this is a support? Look right through here for price action. That's exactly where we pulled up from. You got the trend showing you because it's your friend. You got the support. And now we just have to break this downtrend. If we break this downtrend, oil's going back up to 150 a barrel. All right, BNB coming right back down to support again, right around $209. Shop already pulled back from resistance, just like we talked about. Talked about this literally in my last video. Look at how perfectly it hit that resistance. Look at that. Right on the support, right on the resistance. Twitter, I wouldn't touch this with your money. I wouldn't touch this with anybody's money. All right, so drop, move, drop, move, drop, move. And really, a lot of people are probably seeing this as support. Support's all the way down here. That's not there. Yeah, that's not support. But there's really nothing up here to really support. You got a little bit right here, but the reality is like the bigger support's down here. You could definitely see Twitter drop down to like 20s. Easy. Probably even down here and revisit this 24 zone. All right. Netflix still expecting the rejection. I think they did get up to the zone roughly. Let's see. Nope, a little bit off from the zone. I thought they would come back up and retest the bottoms here, and they probably still could. They still could. But I'm expecting heavy rejection from this zone. Hardcore rejections. This is a heavy support, heavy resistance zone. You can see the price action here month by month. So I would avoid Netflix at the moment. It could pump and then dump right after. You got the DXY moving into the $6 territory. Looking good on support right there. We could see DXY come back down and revisit this $3. It wouldn't even matter. I'm still very bullish on the dollar right now. I think we're gonna get up to those 120 scenarios. CNY versus this is a Chinese yen against the US dollar. You can see the yen's already falling back from resistance. So the yen's already losing again to the dollar. So we got downside. That means that, other economies aren't doing too well either. This is the US dollar to yen. And you can see here, US dollar is now gaining on yen. And then you got some ETH BTC. You got a couple different things going on here. You got your trend straight up. ETH broke the trend on BTC, coming up, retesting the previous trend, right? It's retesting this trend. And then not only is it retesting the trend, you got the downtrend here. You got the perfect retest of the downtrend. So you got two scenarios kind of showing you, hey, this might be the peak for ETH. And then you've got the cutoff right here, support, right? This is the last higher low. And now we've got a lower low, right? So this same scenario right here played out on ETH right in here. So you got the higher low and then you got the lower low. So because you got the lower low and the higher low, this signifies to me that this is a false move. You got the volume dropping with the false move. You got the RSI topping with the downtrending strength. You got the Fu Manchu showing a top here, right? Showing we're at the top of the move and showing that we should be downtrending. You got the stochastic way overbought. If you look over here too, with all of that, last time we topped like this for ETH was right over here. What happened after right over here? Look at that. Look at that. ETH could literally just tank. Not saying that that's necessarily going to happen, but be careful with ETH. This thing looks dangerous. When you're looking at all the on-chain data and all the information that you can utilize, indicators, looking at the chart, looking at price action, everything on ETH says no go for me. When it comes to me, people can feel however they want to feel, but I tell you, feel does not match price. There's nothing in here saying bullish about ETH. Nothing. You could say the merge. You can say whatever you want. Nope. Nothing. Price does not match sentiment. Okay? You can be bullish on something all you want. It doesn't mean price is going to change because you are bullish. Look, think of all the people that were bullish on Shopify. Now Shopify is all the way back to 2019 prices. Think about that. Shopify could go all the way back to 2018 prices. You know how bad this would be on this stock? It would be horrible. So, you have to think about things like that. Adobe, again, another established brand, right? Just getting wrecked and wrecked and wrecked. ADA, nothing. No volume, nothing. It's a dying coin. It had more volume through last year's bear market than it does in the current bear market. And there was less liquidity over here than there is here. And we'll talk about volume in another video. All right, well, I guess that's kind of my quick market update. I just wanted to get that out there, let people kind of know what I think of the market and what all I think is going on. Be careful trading, definitely. Again, don't be overly bullish, overly bearish. I know it sounds like I'm being ridiculously over bearish. I'm just spitting the facts. I'm just telling you what I see, right? Telling you where I think price action is, where it exists, and direction at the end of the day. Now, keep in mind, we could pump for the next 2 months because the FOMC meeting after this one, the next one won't be till September. So they could pump price up to a certain zone, but it doesn't mean we can't go deeper. And that's what you have to keep in mind. And that's not hopium or anything like that. Play the upside. If the market starts moving up, looks good, price action matches, go for the upside. But I will tell you, I think a lot of people are going to get wrecked thinking they're at a bottom and being overly bullish. Because when you look at all the macro, I don't see any reason for price to move. If anything, I see reason for price to be exiting, especially the high risk, aka cryptos. And that means all of crypto is high risk. And a lot of these stocks, you got big players like Google, big players like Amazon, big players like Twitter and these other ones. They're all getting destroyed. And you think that Bitcoin's going to survive over all of them? And I'm not saying survive as in Bitcoin isn't going to be around, but I'm saying liquidity wise. Think about the liquidity. All right, guys. Until next time, I'll see you later.